And now we want to see that how the changes in regular sale price will affect our net operating profit. So question is, if the RBC has the opportunity to sell 150 bikes to a wholesaler without disturbing sales to the other consumers or fixed expenses, what price would it go to the wholesaler if it wants to increase the monthly profit by 3000? So what should be the selling price that RBC should quote without disturbing its existing customers or even changing its fixed cost? So one concept is that so its existing customers won't know that RBC is selling to some other clients or the regular sales is not disturbed. So whether the RBC took this 150 bikes or it forgo this 155, still have to pay fixed expense. So what we can say that, what if our price is so low, right? The idea is the price is so low that we can ignore our fixed cost, because whether we take these 150 units or not, our fixed cost is not going to be affected. So the idea is we're going to remove the effect of fixed cost from our sales price, and that should be the minimum price that we should charge. But we added a different flavor that we want to earn 3000 profit as well. So we just add 3000 profit in our price, and just we want to find out that how much is the price. So let's see that. Here it is. So if we desire a profit $3000 on the sale of 150 bikes, right? So we must have a profit of 20 per bike. How? Because we know that if we want to earn 3000 dollar, so we divided with 150 bikes, so answer is $20. And what was our variable cost? 300 per bikes. And what we said in our previous slide, that we're gonna remove the effect of fixed cost in this kind of special arrangement. So when we add it, our variable cost, our selling price would be $320, right? So you can also see the proof. If you quote a 320 price per unit and you sell additional 150 unit sales, the sale will go up by 48,000, right? How? 150 multiplied by 320, and our variable cost is 300, so 48,000, and this is 45,000. Answer is 3000. That will be added to our net operating income. Why? Because fixed cost is already covered. So recall our definition of contribution margin, that after covering fixed cost, whatever comes from sale minus variable cost directly goes to net operating income, right? So in order to further strengthen your concept, I have added exercise 6.11, and it's from the book 265. I want you to pause the screen here and try to solve its question, all 4 parts, and try to see whether you are in a good shape or not. So what I will be doing, I will be uploading its answers to our group chat, WeChat, and our Blackboard as well. So if you are having any trouble, so we can also have our Zoom live meeting discussion, and also you can see the answer and match your answers as well. Okay, just do it. Now coming towards our learning objective 5, which is determine the level of sales needed to attain target profit. We already covered this target profit example, but with a different taste. Like in our previous slide, we talk about that we want to sell 150 units and with a target profit of 3000, and we did this kind of discussion before. But now we are formally starting to explore this concept. So let's move to the next slide. So target profit analysis, so we can compute the number of units that must be sold to attain the target profit. So we have equation method and we have formula method. Both methods are same. You can use either of them. In equation method, you can also derive what we know about the equation, that profit equals sales minus variable cost minus fixed cost. When we talk about that, profit is equal to contribution margin minus fixed cost. When you talk about profit, when we have CM in units, so that would be very easy to find out here. CM we multiply with the quantity and then we fix cost. That would be in, let me write it here, unit. What if we have CM in ratio? We discussed that it is CM multiplied by sales minus fixed cost. In this case, this is in percentage form, right? The equation method is the same, that we just find out, we just use the formula. This is the equation, which is rewrite is the quantity. In this case, formula method, you just rewrite the equation with respect to this quantity and you can find out the formula method. So we're just going to explore in our coming slides. So the equation method is basically based on the contribution margin approach income statement. So the equation we have used is that the profit equals to unit CM times the unit sold Q less the fixed cost. This is, we just discussed in our previous slide. So here our goal is to solve for the unknown Q. What quantity must be sold in order to achieve some specified profit, right? So to prove this equation or to understand it with some examples, so suppose RBC management wants to know how many bikes must be sold to earn a target profit of 100,000, right? So in our equation, this equation, you just put the amount here. So you see that 10,000 we want to 100,000 we want to have target profit. We know that CM is 200. How? Because 500 is your sale price, 300 is your variable cost, so this 200 is your CM. Just gonna erase it here, and then we have fixed cost. This is 80,000, right? So just need to solve for Q. What is the answer here? Ta-da! 900 units of bike, right? So in order to earn 100,000 profit, RBC must sell 900 bicycles. Okay, now formula method. If you want to use formula method, so this is the formula, that unit sales is equal to target profit plus fixed cost divided by CM per unit. And this is basically the rearrangement of the equation formula. What we learned about in equation formula, that profit is equal to CM multiplied by quantity, and that is unit, minus fixed cost. If you solve for Q, then you just make the fixed cost to the right. So we have profit plus fixed cost is equal to CM multiplied by quantity, that is in unit. So if you want to find out here, solve for Q. So Q is equal to profit plus fixed cost divided by CM. In that case, you want to, this will result in the number of units. So, and if you want to find out the dollar sales, so you just want to, so that you just multiply it with the price or in specific sale price, right? You will find out the target sales as well, right? This is just a small tidbit for you. So let's move further. To verify this formula, we have another example here. With instead, it's the same example to earn 100,000 profit. So we just solve for this. I'm just gonna go through quickly. We just put the value here. 100,000 is the profit. Fixed cost 80,000. $200 per unit is our CM. Answer is just the same.